Hello and welcome into the KE Report. Shad and Corey here, getting an update from Mako Mining, traded on the TSX.V under the ticker MKO, and on the OTCQX under the ticker MAKOF. And we're joined today with the president and CEO of Mako Mining, Akiba Leisman. And Akiba, it's great to get an update on Mako Mining, and good news here to report from Q2 2024 financial results. And the company continues to grow, continues to produce revenues. I won't steal your thunder. Maybe dive under the hood here and share with listeners some of the key metrics you want people to know from Q2 operations.
Sure, and thanks for having me on again, Shad. Yeah, I mentioned this before on your call, is that I think people somewhat miss the forest through the trees, and that we would be considered to be a small producer, so a company that has, let's say, a 40 to 50,000 ounce a year run rate, and instantaneously when mining investors, specifically on the specialist side of the ledger, look at us, you're too small for your own good. But what I've told people literally for years at this point is that you can't compare us to other 40 to 50,000 ounce a year producers just because of the profitability that actually comes from these ounces that we produce, like true profitability over years. So we wound up selling 12,300 ounces of gold. So it's like on the high end. It was a record number of production. So people shouldn't underwrite Mako as at least in a pre-expansion perspective as a 48 or 49,000 ounce a year producer. Consider this more like a normalized run rate at about a low 40,000 ounce a year producer. But with those 12,000 plus ounces, like obviously we generated 28 million US dollars of revenue because we had the gold price, I think, averaged around 23.40 for the quarter. So it's net of the imputed price to Sailfish, that wound up being about $28 million. But from there, it generated over $14 million of EBITDA. And let me just explain something about EBITDA, because this was actually a little bit of a mistake that I actually made when we do adjustments to EBITDA. So one of the things that I never actually changed in our calculation for adjusted EBITDA was to change mark-to-market losses on our derivatives. So we still have a silver loan that's getting paid to Sailfish on a monthly basis. But because silver prices went up so much, there was about a $900,000 mark-to-market loss on that silver loan. So from this $28 million, if you actually take back that $900,000 mark-to-market loss, this company was generating EBITDA in excess of US $15 million for the quarter. This is not like annual EBITDA run rates. This is a company like a year ago was trading at a less than $60 million market cap. And when people think about mining and EBITDA, everything they gloss over is like, yeah, well, this is a capital intensive business, and what is the true profitability of what your underlying is? You have to reinvest in the ground. So even though we actually have a pretty extensive exploration program, what I like to point out, and we didn't explicitly put this in the press release that we had this morning, but one of the good sense checks that people have if you're going to be like an investment analysis. So I actually have for those that aren't aware of my background. So even though I'm an engineer by training, a chemical engineer, I did spend most of my career on the investment side of things. And it was always like a joke looking at mining companies, because people would actually say what their quote unquote profitability was. But if you applied any normal metrics to the mining industry versus, let's say, what you say in the software industry or various other parts of the chemical industry, basic materials or anything like that outside of specific mining, the balance sheets and the income statements would be jokes if you actually looked at it with an investor's lens on, without looking at the whole gold mining math that comes with it. So one of the good sense checks that you have is, all right, let's see, what exactly is a company's return on assets? What is their return on equity? Imagine that. When was the last time you actually heard a mining company talk about return on equity? And I put a little snippet in the note, is that our average equity balance on our balance sheet, just because we're very conservative on how we book our assets, is probably running in the mid $20 million range over the course of the last 12 months. We generated basically that in net income over the last 3 quarters. So we have a return on equity in excess of 100% right now. Now, there are specific reasons why our equity was so low and our income was so high. There's a long story as to why that's the case. But if you actually look at these numbers pro forma, anybody without the poison of mining math investment analysis in their brains, so people that aren't kind of made mentally retarded because they're experienced in the gold mining industry over the course of the last 10, 15 years, you basically are looking at economics and a company that's generating profitability in the context of, let's say, if we were a software company or something like that. Truly unheard of. And I don't think people that are actually normal participants in the gold mining industry truly appreciate just the high quality nature of what our earnings and income actually were for this quarter. I think anybody that came at this, looking at this from a generalist perspective, without all the World Gold Council weird stuff that comes with how you account for your income, earnings, and cash flows and costs and things of the sort. But if you looked at it strictly from an investment perspective, I can't think of another company relative to our size that has as clean or as robust financials than what we just put out this morning. It's just that extraordinary.
Hey, give you credit, Akiba. You're running this like a real business, generating return on capital and also using those mine operating cash flows to do exploration, pay back debt, repurchase shares, and still grow your cash balance. Can you talk to us about that strategy of using this operating cash flow for growth, but then also paying down debt and buying back shares, please?
Yeah, so let's take a look at this from a standing start. So we built this mine. I guess we took over the management of the company semi-officially in March of 2019 and then officially in August of 2019. And then right before the official takeover of management in July was the first time that the company raised equity to go build the mine. So that was about a US $20 million raise. There was another US $20 million raise that happened in July of 2020. So that was now almost 50 months ago, 50 months ago. That was the last time we raised equity to build this mine. And on top of that, we took on US $21.5 million of debt. And then the last debt piece on a net basis came in February of 2021, about 3 months before the mine turned on and about 5 months before the mine declared commercial production. So since that time, we've repaid in excess of US $20 million of debt. There's still another $6 million of debt on the balance sheet that was part of the accrued interest that built up over time. We've spent on that time and reinvested about US $30 million in exploration spend, all coming from the cash flows from the mine. And with that, we've repurchased, I think, in aggregate over the years, probably close to 2.5 million shares, which is roughly the amount of shares that got sold in that second tranche outside of the controlling shareholder. So basically all those shares that we went and raised outside of the controlling shareholder have basically been redeemed during that time. And the balance sheet is pristine right now. So over the last quarter, we had enough space in addition to running our pretty robust exploration program to repurchase close to US $2.9 million worth of stock. A lot of that was around the noise of the acquisition that we were working through for Gold Source during that quarter, because this goes back to the mining industry. If somebody gives you a bid for your stock, the first thing that you want to do is sell, right? So the large shareholders of Gold Source never actually spoke to me about what was actually going on over at Mako. I would have gladly given them the story. Their first reaction was they got a bid, sell the stock. So we were very active on the buyback because I wanted to make sure that our shareholder base was strong, that our shareholder base was happy and actually wanted to be there. That wasn't like trapped in some sort of roach motels that you find elsewhere in the mining industry over here. So we were able to be very aggressive on the NCIB, repurchasing about $2.9 million worth of stock just for the quarter. And even with that, our cash and gold and receivables balance still went up $2.4 million. And again, that's after we were investing in, towards the end of the quarter, at least, a fully ramped up exploration program. So even though if you look at our income statement, there's actually like a very small amount of exploration expense that we took, just like a few $100,000. But we've actually begun, just because now we're fully permitted over all the areas that we're drilling right now, we now capitalize our exploration expense, and we're more than comfortable doing that. I think like we took our mineral property interests from a book value perspective last quarter down to about $500,000. So it was kind of like a laughably small number. It was actually one of the reasons why we generate such high return on equity and return on assets at this point. So recapitalizing that is actually an appropriate thing to do with a balance sheet like ours, where some mining companies, they're probably doing that just to kind of pad their asset base and book value. But for us, it's an entirely appropriate thing to do. But actually, now that we're ramped up, we basically have a run rate of about US $2 million a quarter on the exploration side of things, all being funded through cash flow. So no matter how you look at this company, it's like, all right, we funded capital to build this thing, and then once we turned it on, we didn't need any more capital, and we were able to run our business not only internally but also be able to go and acquire gold source. I mean, how many small scale mines do we see in the industry that raised just enough capital to build what you needed to build and run a public company along it, that once the mine turned on, you didn't need more capital? Like, I'm trying to think of anybody kind of in our snack bracket that was able to achieve that. It's kind of like this unicorn in the mining space. Imagine that you capitalize something on a fit for purpose basis, and then you use the cash flow from your business to go and reinvest in your business in terms of what you see in the four corners, and then look for external opportunities when they come along, like what happened with Eagle Mountain and Gold Source.
Yeah, Akiba, it is like a unicorn in the mining sector for sure. There's a lot of companies that claim that's what they want to do. They want to grow organically and bootstrap it, but they usually don't have enough sustaining capital. They run into all kinds of problems, and they inevitably go back to the market not just once, but over and over again, frustrating investors. So it's nice to see a success story here in the mining space where not only did you get the mine up and running successfully, but you've been funding so much exploration and continued growth with it. And even, the acquisition you just made of Gold Source Mines and brought another mine in another jurisdiction into the portfolio. But let's dive into the exploration. You are spending $2 million a month, and you were spending more than that before, but you've converted it over to more RC drilling, as we've discussed in the past. But you've had some really great results out of Las Conchitas. We've been following along with that, but you put out even more news since the last time we've talked. Back on July 29th, you intersected 23.84 grams per ton gold and 12.1 grams per ton silver over about 4 meters. And then 36.88, almost 37 grams per ton gold and 53 grams per ton silver over 4 meters. And that's the estimated true width. These are some great high-grade results. Maybe to speak to not just the results, but how that feeds into the mine planning.
Yeah, actually, I'm glad you caveated the end. So we wound up putting out our updated resource officially in December of last year. It was actually one of the preconditions of advancing the dialogue with Gold Source. That was kind of important to get out. And at that time, we were still operating on this bulk sample permit that was issued by the government as kind of like a temporary measure to be mining over at Las Conchitas, which we started to in June of last year. So we put out the resource. The areas around the bulk sample were pretty well drilled out. That was going to be enough to sustain us operationally, really till about that now in 2024. We were fortunate that we were able to get the full EIA approved, signed, stamped, delivered a couple months ago, thereabouts. So the first couple months of the year, we needed to do some infill work. So the areas outside of the immediate bulk sample, but still in areas that kind of we knew that there was resource there. So that was kind of the stuff that was going on in January and February. And then this press release that you're referencing, that was really the first data that we got out when we were stepping out beyond what we know about from the resource perspective. So doing kind of like small step outs from what we have over the resource. And you can see there's like extraordinary numbers that are coming out from the exploration side. Later this month or very early September, I'm going to be putting out kind of all the regional and prospecting work that we've done really since 2022. That was the last time that we put out like a regional press release. And you're going to see it's like the stuff that we're mining right now at San Albino and Las Conchitas is not different than anywhere on our 28 kilometers of strike, our 188 square kilometer land package. In fact, the gold goes off our ground in all directions. And then you can see the types of samples that we have anywhere. You can have like multi-ounce, potentially even double-digit ounce material that we're finding like just at surface over there that's never been drilled before. So we were able to kind of like navigate around some of that, it's called finagling around that bulk sample over the course of the last year. Now that we actually have the flexibility to go and mine this, we can actually have like a more thoughtful like mine plan going through instead of like just being in constant scramble mode. So it will take time to stabilize that a little bit. I think Q2 is a good example of what this looks like when we actually have like a well-planned short-term mine plan when everything is kind of humming along with full permits to deal with where we need to go from a ground perspective. And then what you're going to see, like when we put out results, not only like what we had from a few weeks ago, but some additional drilling results that we have for Las Conchitas, and then the regional prospecting results that we have on the rest of our ground. It doesn't take a genius to see is that like we literally have hundreds of targets on our ground, and eventually we're going to be having quite literally dozens and dozens of these open pits that will be able to sustain an open pit mining operation for really decades and decades to come.
How do you go about prioritizing these regional targets? If you continue to expand mineralization around the areas that you're mining, what moves forward regionally and into a, let's say, more near-term mine plan?
Yeah, a lot has to, I mean, people from the outside looking in may wind up thinking that all decisions are made with a very clear-cut view on geology and prospecting and kind of how you think how things go about from a systematic perspective. The reality is you have to deal with people, right? So it's not like you're just dealing with geology over here. You got to deal with like real life people who own the ground, sometimes legally, sometimes not. So you have to negotiate with everybody. And then sometimes you make prioritizations about what you can do as opposed to what you would do if you were just kind of reading this out of a geology textbook. And like a perfect example is kind of Las Conchitas, right? So San Albino was always like the prime target over at our land package. This was probably the largest historical operation, but still a relatively small mine that only wound up producing about 20,000 ounces while it was up and running commercially, if that, over a 30, 40-year period between the late 19th century until when it was closed down in 1926. The second priority was not Las Conchitas. The second priority was El Golfo, which is to the south of Las Conchitas. But there was pretty extensive artisanal operations over there. There was a landholder that was somewhat difficult to deal with over the course of the last 10 years. So it was always kind of like deprioritized in terms of where we're going to focus. And that's actually the reason why we're mining at Las Conchitas today, as opposed to El Golfo. And then lo and behold, when we're actually good stewards of the ground and have relationships across our property, even non-cooperative landholders over there eventually realize that what we're doing is a good job for us, good job for them in terms of deals that we can actually wind up doing. So this is really like the first time that we've actually had the ability to go on the property of El Golfo to take a serious look at what's there, knowing that this was always going to be the second priority in terms of where we need to be. So everything that we're finding over at Las Conchitas right now, there should be expectations that there's going to be as good, if not better, stuff on some of the other targets that we had. And the only reason why we didn't go and focus over there is because we really didn't have a clear-cut path to exploring there. And we do need to have some exploration work before we can actually start getting this permitted and mined. But having said that, I mean, like the punchline that I keep coming back to is that what we see over at Las Conchitas is not all that different from San Albino, which is not all that different from El Golfo, which is not all that different from Puerto Rios to the north, not all that different from La Segoviana concessions 20 kilometers away. And you're going to see that when we put out the results on this regional survey that we're doing, that basically shows that everything is basically in the context of finding this extremely high-grade orogenic system across the entirety of our 28 kilometers of strike and 188 square kilometer land package. And we'll prioritize it to areas that we can focus on, even if the prioritization is not strictly about geology.
Well, Akiba, just briefly, you mentioned El Golfo, though, as being what would initially have been your second priority, and you're still working on that. But you did bring up a couple other targets we've mentioned in the past, like La Segoviana and Puerto Rios. And last time you also mentioned El Silencio. Could you just give people listening in just a little teaser as to why the team is still excited about those other regional areas?
Yeah, so El Silencio, San Luis are all part of our Segoviana concession. So El Silencio literally is on the border of our concession. It was actually going back to the regional survey, which I said that the last time that we put one out was, I'm not sure if it was 2022 or 2021, but I mean, we may have actually done two. I think it was the first one that we put out. I had a headline written about El Silencio that said, I don't know, we found like a meter of, I don't know, 130 gram material. And it was like this big headline number over here. And we were about ready to pull the trigger on issuing the press release. And then one of our geologists came back and he said, oh, by the way, we've actually rechecked the survey and it looks like we actually accidentally took a sample about 5 meters outside of our concession, right? So it really is at the tip. So we actually had to change the headline. So instead of like putting out I actually forgot the result that we put out. So instead of putting out like a meter of 130 grams, I think we put out like a meter of 100 grams instead. So it was still like a pretty splashy and spectacular result from El Silencio, but we couldn't actually put out the result that we accidentally took because we were actually on somebody else's, actually it was the government's concession. Luckily, they didn't care too much. We shared the data with them. So El Silencio is kind of important in just from a position perspective. It shows you like all the way at the tippy top of our concessions, we actually have the ability to find super high grade gold, and that's literally as the crow flies about 21, 22 kilometers away from our current mining operations. And then you take your trucks right back down to the plant, and you're going to see on a fairly consistent level of periodicity, finding very similar type grades and thicknesses across the entirety of our land package. It's one of the reasons why we actually can say with a straight face is that we do think that we're sitting on an orogenic system over here that has all the hallmarks of containing millions and millions of ounces of gold. And it's always played with people's heads over at Mako. It's like, your resource is so small. It's like, yeah, if we actually want to have a mineable resource and do the data correctly and actually mine a profitable operation, because we're not like mining this to flip it to an undisciplined buyer. We would love to do that if somebody wanted to step in and buy us at a huge premium. But we were never underwriting our business with that approach, that we just needed to have good quality data to sustain our mining operations. But likewise, we kind of understood some of the limitations that we had as a public company with that, which it wasn't the prime reason why we went and acquired something like Gold Source. But one of the things that the Gold Source brings to the table is that it's the type of ore body where you can actually block out reasonable tonnages and the size and scope of the resource and do it in a credible way, where we're pretty confident that having like an in-pit resource of 1.1, 1.2 million ounces as a starter and 1.8 million in all categories for your overall resource over here is actually based on real high quality data. Now that's going to need to be infilled before we actually go ahead with the construction decision over at Guyana. But we do now have a project where we don't need to arm wave around what we think is going to be there in terms of life of mine resource. We actually have a project just because geologically speaking, geostatistically speaking, you're able to develop a resource of enough size and scope that it checks some of the heuristics and boxes that some of the specialist investors in this industry need, because a lot of those specialist investors really don't pay attention to what normal people pay attention to, which is the underlying profitability of the operations in the business, like we were able to report this morning with our Q2 financials.
Let's talk about the work plan then at that Eagle Mountain Gold project. As you said, resource there, you still need to do some infill drilling to get to a construction decision. How much infill drilling do you have to do? What are you going to do this year? And what's a general time frame of when you could be at a construction decision?
Yeah, so I'm actually headed down with Steve Parsons to Guyana in a couple weeks. So we're going to be meeting with various government agencies. So while I've met them before, at the last time I was down in Guyana, it was still kind of like a super secret about Mako taking a look at Gold Source. So I intentionally did not meet with the government last time I was down in country, although we did meet with them when they were up in Toronto for a mining conference. So I'll be down there in their home turf and basically laying out what I always lay out with people when we take over a project, is that we're not a normal junior mining company. Is that when we promise to go and build something, we have the technical capabilities, the management and stewardship, and the access to capital in order to deliver on our promises. It's the same thing that I did with the Nicaraguan government when we took over as management in 2019, after the predecessor made a lot of promises that just weren't delivered to the country and the local community. We take that very seriously, is that if we're going to be saying that we're going to be building something, we make sure that we quite literally move mountains in order to achieve those objectives. So we're gonna have that conversation about what actually needs to happen going forward. We still have I think a very realistic schedule of doing all of our infill and engineering work to put ourselves in a position where we're going to be able to submit a permit application by the second half of next year, and then hopefully without any major issues, we'll be able to get permitted for construction by the end of 2025. We're now putting in our public presentation materials that we expect first gold pour to happen in the very early part of 2027. It could happen probably a little bit earlier if everything kind of works lock, stock, and barrel between now and then. But I do think that's kind of a reasonable timeline in terms of being able to get this thing constructed. So during that time, over the course of, let's say, the next 12 months, we're going to have to do everything. We're going to have to make sure that we tighten up the geological model, to make sure that we actually have, to our internal satisfactions in terms of what's going to go on with the mineable resource. And then likewise, we're going to have to be making engineering choices a lot around tailings management and how we're going to be building this asset kind of in stages, one focused on a saprolite only approach, and the other one kind of having a mixed saprolite and hard rock type operations. And we're going to see how do we do this in a way that's the most efficient from a capital perspective, the most safe from an environmental perspective, because we do need to be cognizant that we are operating in a region where it rains a lot. So hydrology and tailings management are things that you need to be very serious about. So a lot of those engineering choices are going to be around that. And I think we're in a pretty good position where over the course of the next 12 months, a lot of those answers with real data, stuff that we can actually handle internally, like plant design, and stuff that we're going to actually need to outsource with some experts in terms of the very specific stuff, we'll be able to deliver like a good project for development by the end of next year. And then we think we'll be able to capitalize it and get this built over the course of 2026 and have first gold pour at the very first part of 2027.
Well, Akiba, it's going to be exciting to follow along with the progress at Eagle Mountain. I appreciate you laying out the general timeline there as far as where you expect things to hit, as far as the development, the permitting, the drilling, but then the construction and build decision, and then first production. Exciting times for the company, and nice to see a solid Q2 financial quarter for the company. Once again, the mine is humming right along at Las Conchitas and San Albino. Keep us posted as more exploration results come out, not just from Las Conchitas, but some of those regional targets. We'll get you back on for an exploration update. And if people want to follow along with the news at Mako Mining, definitely click on the link below this interview. It takes you right over to the company website, straight to the news section, so you too can follow along with all the news as it's released to the market. And Akiba, as always, looking forward to our next conversation.
Great. I appreciate it. Thanks, guys.